Hello traders and welcome to Forex Friday. It's Stu Nagpan here, founder of Master Markets, Elite Trades Conference and the Traders Open Day. So today on Forex Friday, I want to tell you that the great news is that this week we've made about 317 pips, and that at 10 pounds a pip is 3,170 pounds for this week alone. Now let's say all the strategies that we did to actually accumulate that profit of 317 pips. But before that, as in every Forex Friday, let me just go through one topic for you which will be so critical for you and important for you in improving your own trading performance, which is, the topic is 3 key points for making consistent profits. So what are those 3 key points? So let's take a look at that. So now, the first point, what we are looking at basically in terms of in a strategy which can give you profits in the long run consistently, is first thing is what we call the reliability factor. Okay, the reliability factor. Now, what do I mean by that? Now, in reliability, what we mean is that how many times does your strategy actually make money? So, in fact, for example, if you make 10 trades, if you're taking 10 trades, how many of those 10 trades actually are winning trades and on losing trades? Okay, so you must know this number. Okay, it doesn't necessarily always need to be more than 50% reliability, because there are strategies out there even with 30% reliability can still make money. In fact, for smart money, the stats is 45.59%. 45.59% of the time it does make money. You got a winning trade. Okay, now that's the reliability of smart money. I mean, you must know your stats for any strategy that you're following or any strategy that you have built. So for example, on this dollar Swiss trade that we can see, which we've banked in just a little bit under 1,500 pounds over here, as you can see over there, and you can see a few more losses before that, but you can see that this overrides all the losses. But you can see that the reliability, that's what I'm telling you, is about 45.59%, even less than 50%. But still, how do we continue to make consistent profit? So the second thing that you need to think about is reward to risk ratios. Reward to risk ratios. Now, traders, over here, this is very important to understand these 2 points, what I'm going to tell you about reward to risk. Now, the usual reward to risk that most traders usually talk about is actually what we call the expected reward to risk. Okay, expected reward to risk. Because you see, traders, whenever you've calculated your trade risk, which is your entry minus your stop loss, and then you can project whatever amount that you want. You can do 5 to 1, you can do 7 to 1, you can do even 10 to 1. So this expected reward to risk ratio, of course, firstly, has got to have some sense and logic behind it, and has got to come from statistical validation, which I'm going to talk about a bit more later on. Now, the most important one that we are looking for, so firstly, this expected reward to risk ratio has got to come from statistical validation and research. Okay, these 2 points. And finally, once you have done that, which is based on these 2 things that you have done on your research, finally you need to measure. This is so critical that most traders don't know, is your actual reward to risk ratio. Your actual, what is your strategy actually performing? How well is your average profit to average loss ratio actually performing? That is what is called your actual. And then we compare the actual to the expected and see how far we are deviating from that projected reward to risk ratio that we have done from our research and from statistical validation. Now, one more thing I want to tell you before I go on to the third point, which is essential for making consistent profits, is that all these things, these 2 points that I've just mentioned to you, you must only can have absolute conviction in those stats only when your strategy has been quantified. We keep on stressing this in every conference and seminar that we do all over the world, and especially in Traders Basecamp, where beginners and intermediate traders come there, and we talk about this so important, this quantified rules for your strategy, because only when it's quantified will you have confidence in your stats. Because if it's not quantified, if it's subjectivity, if it's based on discretion, and what happens is that the whole stats comes from inconsistent data, inconsistent execution. Therefore, the stats will be valid invalid and be redundant. And therefore, the most important thing, traders, even though it's profitable, the worst thing is that you can't scale it, you can't reproduce it. And that is what is the biggest disadvantage when you don't have quantified rules. Now, the third thing, which is important for making consistent profits, is you have to think cumulative. You must think cumulative. It's not just about one trade. It's about the cumulative set of trades that is going to give you the consistent profits over the long sustained period of time. Okay, so these three things you must keep thinking. This is a very tricky thing for your mind to really grasp. So even though by theory you might accept it, but in practice, probably your whole psyche has not been aligned to your intellect yet, because the biggest enemy, if I may say, to this thinking in this way is your emotions. Okay, is your emotions. When you've taken 4-5 losses in a row, your emotions will kick in and it will say, you know what, let's take the profit off the table right now, or let's take it as a small loss right now. So your emotions is the biggest enemy towards this, and that's what I was talking about this yesterday in terms of psychology and keeping your mind present as we were taking that morning glory trade and we took a very small loss. Okay, so this is very critical in terms of getting towards cumulative. Your intellect must be convinced of the edge of your strategy, and your emotions must be stable. The final thing what I want to say before we move on to our trade reconcile for this week, what I want to say is that you must know the statistical edge for your per parameter that you have formed for your strategy. Okay, now let me explain what do I mean by that. Now everything over here, you see, for example, your reliability, your reward to risk ratio, especially your reliability and reward to risk ratio, has got to come, as I said, from the statistical validation from your research. Your research is very critical before you formulate each one and every rule for your strategy. So let me give you an example. Let's say for smart money, right? So we got, like, let's say 5 criteria. We got, let's say, 5 criteria for us to enter, and then we got another 4 criteria for trading stop loss, and then we got another 7 criteria, let's say, for target. Now think about this, right? Each of these rules that you formulate, which is quantitative, and towards your entry rules, let's say in this example, must each parameter must have been researched and statistically validated, and must have an edge as well. Okay, and must have an edge as well. This is why we stress so much the importance in Traders Basecamp of hanging around like-minded professional people. Okay, because this is the only way that will just quicken your progress in the fastest amount of time. All right, so this is all important, traders. So if you all haven't done that, take a step back, really look back at your strategy, and then see what you can do to improve. And of course, if you're stuck and if you need some help, we are always here to help you, and you can always email us, and we'll be more than happy for our client service team to get in contact with you, and then we can take things forward from there. Right, now moving on swiftly forward is towards our trade reconcile. So quick summary before I move on these 3 things I've told you about 3 key points for consistent profits. First, reliability. Second, reward to risk ratio of your strategy. And third, very important, which I made another video about this as well, is think cumulative. Okay, if you've missed the other videos that we've done or anything, subscribe to our YouTube video. We're putting so much high quality content for you, absolutely free. Just learn that and move forward, traders. Okay, right, so now let's move on into our trade reconcile for this week. So we start off with smart money. So smart money, as you know, we took it on dollar Swiss. Some of you may be following us on Pelican app and also on our YouTube channel videos as well. You would have very well known that on dollar Swiss, if I just would bring up just a chart over here for you, on dollar Swiss, what really happened over here is that we took basically a short position. We got out at our position at 95.75, just around there, where we got out of our position, 95.77 if I'm to be exact. 95.77 we got out, and we made, actually just on dollar Swiss alone, we made 124 pips. 124 pips on smart money, which was closed out in this week. Okay, which was closed out in this week. Let me show you that on the journal over here, and you can see that 23rd June is when we opened it. 6 days, passive, 15 minutes of just monitoring it, because all the research has been done. Okay, and of course, remember that over here at Master of the Markets, we pride ourselves in establishing the truth in this industry, and the most important thing for us is that I'm not going to hype over here. None of my team is going to do that for you, which we're going to say, you know what, this is so easy. You know what, you just got to leave it 15 minutes a day, six days. Yes, the execution is that easy, but we have done all the long, hard, laborious work with our research team, and that is why now it all is easy. So the fastest way for anyone to progress is to learn from the professionals, and that's what we do. A great opportunity at Traders Basecamp. And after that, I mean, it's like learning the systematic methodological steps to then get your consistent profits all the sustained period of time. Right, now let me move on. After smart money, what we're looking at now, looking at morning glory. So morning glory is our intraday strategy. Right now there's quite a little bit of volatility in the intraday charts, a lot of noise. So this week our biggest profit runner was our 44 pip runner on the 28th of June, which is just 2 days ago, when we had Bank of England Governor Carney speak as well. So on that move, we got a whooping 44 pips. But overall, for the week, we made 22 pips. All right, 22 pips of profit for this week, starting from the 26th of June. Okay, so that's what we did in terms of morning glory. Over here, we made plus 22 pips. Over there, smart money is plus 124. Money bars has been nil, no trades at all this week for that. Lift off, what did we achieve for that? Now let me show you that on the journal as well. So that is actually all for our LTM members, our MTM advanced members who are following us in the live trading room. Have also learned about these trades as well. So in that, we took a dollar Swiss trade beginning of last week, and then we closed it out for this week as well, just 3 days ago. And euro dollar, we took that as well. The market has been kind to us, and we took profits on both those two currencies. 112 pips on dollar Swiss, and euro dollar we've made 101 pips as well. So 213 pips on 213 pips on liftoff. 213 pips on liftoff. And final strategy, PTP, profit turning point. We took actually a small loss over here of 42 pips. Now let me show you that on the journal as well. In terms of profit turning points over here, what we have is actually dollar Swiss for this week running what we had, and that's a minus 42 pips, as you can see over here. All right, now so based on that, so I will just put it over here. So we got a minus 42 pips over here in terms of PTP, profit turning points. Right, now overall, so when we add up all of this, 124, 122, and then we got plus 213 over here as well, and then minus 42. What we have done for the week is 317 pips. Okay, so 10 pounds a pip, that's 3,170 pounds. 3,170 pounds this week. Now traders, you must understand, firstly, I want you to learn a few points about here as we do the trade reconcile. Firstly, I mean, we do this for our own selves as well, because we want to know how well we have performed. And secondly, when we're sharing that with you, we want to show you as well how you guys should be also doing it and tracking your performance. Most traders don't even get to this step because, you know, they're just doing it by themselves. You know, their mind gets to them, the emotions gets to them. They don't know how to do it. And that's why I always stress that hanging around professionals is so important. And that's what we keep drilling in at Traders Basecamp. Right, so that's the first thing I want you all to learn, how to do your trade reconcile, and it's got to be tracked on a journal, and it's got to be systematic, it's got to be methodological, right? So that's the first thing I want you all to learn. Now, the second thing what I want you all to also take away from this, and which we keep reminding ourselves, is that if you've been following us on Forex Friday for the last like 4 or 5 weeks, you will know that the last 2 weeks has been pretty quiet, has been small profits. But you know what? Why is it that we're able to achieve like whooping profits like this? Really, like some weeks where we get really big profits like that, and other weeks we get like small profits, small losses and all that. Why is that? It's because of the 3 key points that I just mentioned to you for making consistent profits. You must know your true edge of your strategy and must know your true valid statistics of your strategy, which is why which is why it will keep repeating itself again and again in terms of its edge proving true in any market conditions. Okay, so you must answer all of that. And if you're struggling with all of that, you know what I told you, I mean, there's help over here. We are here to establish the truth in this industry. We're not here to hype anyone up and say, you know what, you're going to make £10,000 tomorrow, you're going to make £100,000 tomorrow. No, we're not here to hype you all up on that. We're here to establish the truth. We're here to tell you how you can do it systematically, methodologically, and how you can do it consistently. That's what we're here to do. Alright, so that brings me on a wrap on this Forex Friday. So as you can see, we finish off the week really with a whooping big profit of £3,170, which is 317 pips, or £10 a pip, 3,100, just under £3,200. Alright, okay, so that's me from this video. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.